Hi guys, welcome to the video for chapter 5, which is about creating a new company file in QuickBooks. So up until this point, we've dealt with company files that were already created, whether they were portable or company files. They were a business file that was already created that we were then editing. In this chapter, you're going to, in the DYS assignment, create a new company file for DJ Rhymes. So when you're creating a new company file, it could be because the business is new, or it could be because the business is new to QuickBooks. Or it could be because you just want to upgrade from an older version of QuickBooks to a newer edition like 2018 that we're using. So we're going to jump in. I'll be showing you around actually taking these steps in QuickBooks, and you can see the cheat sheet I set up right here. I'll be zooming into each section, but an overview for creating a company file is number 1, a planning stage. Number 2, creating the file in QuickBooks. They have some automated tools to help you through this process. 3 is customizing that file. A lot of things we've been learning, customizing accounts, setting up classes, and items as well. And then lastly, number 4 is setting up different users with different accessibility and security, like adjusting passwords and customizing reports for the business as well, learning how to create your own customized reports and saving those. Okay, so the first stage, move my face, the first stage here is planning. An important aspect of planning is what the start date will be for the business. That is relevant if you have a new business and the date that you're forming the QuickBooks file is rarely the same date that the business actually started. Or, of course, if you've had a business, say, using a spreadsheet for their records and now they're going to be set up in QuickBooks, you have to decide what is the start date in the QuickBooks file going to be and what is the actual start date of the business. Because there's a difference between updating what's happened since the start date by actually recording and reconciling all the transactions, or choosing a start date and then you'll enter beginning balances for various accounts and be beginning to reconcile from that start date on all of the transactions. Planning the chart of accounts is something I've prioritized when I help businesses with accounting to really make the chart of accounts more relevant to how they think about their business income and expense items. There are templates in QuickBooks, and we'll be looking at that in a second. So this checklist is from the book, and this goes through all the different types of things that may sound familiar that you've been learning how to use in QuickBooks, and looking at how that business wants to use them, what industry they're in, what products they sell for items, and getting all of those accounts set up and the different things they're going to use. You know, most businesses sync a bank account, and so that pulls in those transactions automatically. That's highly recommended this day and age. And so you would need the bank account information to be able to sync that. Are they going to use payroll? Are they going to accept credit cards through QuickBooks? These are all things that I think the more the business utilizes, really the more they get out of QuickBooks. Sales taxes, different types of billing statements, invoices, what type of invoicing, lists of vendors, customers, templates. You can read through that list as well. On to number 2, when we're creating the file in QuickBooks, I'm going to walk you through that in a moment, but you do have a few different options. You can convert an old file or start a new file, and you can choose Start Setup or Advanced Setup. And Start Setup gets you into the software as fast as possible, but it doesn't walk you through really setting everything up. Preferences are going to be a big area where you customize the way different options show up in QuickBooks for how the business does business. And then, of course, you'll need to add vendor and customer lists, bank accounts, product and service items, and chart of account options. So this is another screenshot from the book talking about company preferences versus my preferences in QuickBooks. And I'll show you this as well. And so for this, you can set things like bill, the number of days that a bill is due, forms, kind of how payments are processed, job and estimates. Do you want to use estimates? Do you want to allow progress invoicing? We'll get to that later on in the book. Do you file 1099s, different reminders, versus my preferences, which is about the calendar, the desktop view, what it looks like, and different options within actually using QuickBooks preferences versus company preferences. Okay, so let's look at some of this in QuickBooks. So when you open up QuickBooks from here, you see the first option, that first square at the bottom of this window says create a new company. You can also go file, and the first option there is new company. And that brings us to this pop-up, which you may recall Xing out of quite a bit. Now, Express Start, that blue button, that is the fastest way to get a new company started in QuickBooks. And when you go through the DYS, you're going to do the Advanced Start, which you can see down here on the left gray button says Detailed Start. You can also create a new company based on an existing one. So if, let's say, a bookkeeper or an accounting firm handles similar types of clients, that could come in handy because they may use similar accounts and just very similar company settings. So they would be able to benefit by creating a new company file quickly. And then the last option here on the bottom, convert data from Quicken or other accounting software. You can create a new file from an existing company file or convert other data. So we'll do the detailed start. Test new company. And this is where you get to select your industry. And this is going to affect some of those preferences automatically. And it's also going to set the chart of accounts up based on, the nature of this industry. So we'll leave it as accounting. This is where you select what type of business, because this is going to affect the balance sheet accounts and the owner's equity accounts. We'll do a sole proprietor. And this is whatever the income tax year is. So most businesses, especially small businesses, use a January start date. That you have to actually, there's a lot of rules that go into using a different tax year other than the standard January through December 31st tax year. So this is where you initially set your password. You'll learn how to change this in this chapter when you're going through the DYS. And now they're going to go through, choose where to save your company file. We are quite accustomed to this. Test new company, save. And now it's going to create that file. We'll go back to that process in a second, but we'll come over to the third task. So once this file is created, then the third task is to customize it more detailed. So adding our customer and vendor profile lists, you can change some of those options for what you want to keep track of when it comes to customers and vendors. If you recall, they have some options set up for how a customer found you. Did they find you through an advertisement? Did they find you through maybe a contact or a referral? So you can set up those different types of features based on what the company wants to keep track of. Maybe you classify vendors for different areas of the business. With the chart of accounts, we'll want to go through, maybe create sub-accounts, right, to track different types of income or different packages or different expenses within account totals. You can just delete, even though we're choosing an industry chart of accounts, there still may be accounts that we know we're not going to use, so we want to delete them or change them, tweak them a bit. We may want to assign accounts to different sub-accounts, different services, like you've been setting up with items to create service items or products, and then assign various accounts to those items, income accounts and expense accounts. We'll be covering that more as we continue through the chapters. And then, of course, entering opening balances, which is what I was talking about before. If the business has had any activity up until the starting company date, then we'll need to enter opening balances. And from those opening balances is when we start recording all of the transactions. And summary transactions is a method for doing that. So there's different ways of entering opening balances. You can, actually set up one invoice to record accounts receivable balances, one for each customer, versus the actual, all of the transactions that went into that, and then a payable account. You can also do this with journal entries, and you'll be going through that in an exercise for the DYS. Now, class lists, remember with classes are a way of dividing all the activity in a business. And so every transaction that takes place, whether it's a bill or an invoice or any transaction, you can assign a class. So it can be useful to use classes for things like overhead versus operating expenses and different areas of operating expenses, or whatever makes sense. So some businesses might have multiple locations, and they'll use classes to identify the different locations. So remember, items are used for products and services so that you can easily and consistently choose a product or service on an invoice, and it will quickly handle assigning that income to an income account and any expenses also from that income account. Classes apply to every transaction. Okay, let's go back. We'll continue along here. So now they kind of walk us through this, right? It's called the easy step interview. Customizing QuickBooks for your business. Next, we'll customize QuickBooks by turning on features that meet your business needs. To do this, we'll ask you questions about what your industry and what you sell, how and when your customers pay you, and how you pay your bills. So this is part of the more detailed features that we get going through the advanced options. So we'll say, we said this was an accounting firm, so we'll say services only. Do we charge sales tax? Well, in Hawaii, we have to charge sales tax, but I'll say no for the sake of this example. Do we want to create estimates? So estimates can also be called quotes, bids, or proposals, and they come first, right? And once the customer agrees to it, then in QuickBooks, you can easily turn that into an invoice. Statements. So billing statements is a specific, we covered this, I believe, in chapter 3. Statements are a method of billing. So if you choose to use statements, you still record your invoices or sales receipts as the customer makes payment and as you bill them. But because there's a lot of ongoing charges and back and forth, you simply send a billing statement once a month. And so this is a way to turn that feature on, although I find it's usually on by default. Using an invoice. So do we want to use invoices? Yes. Do you want to use progress invoicing? So that is often applies to construction businesses. We'll go ahead and say no to that. Do we want to keep track of bills that we owe? So we'll say yes. Oftentimes bills are not tracked for small businesses because, most bills might be paid on auto pay and they'll just be entered into the accounting software periodically. Tracking time. Do we want to track time? Sure, we'll say yes, and then it can be actually billed to the customers. Do we have employees? We'll keep it simple and say no. Using accounts in QuickBooks. So next we're going to look at the chart of accounts. We'll need to decide on a date to use as a starting point to track your business in QuickBooks, understand how you want to categorize your business income and expenses. So do we want to start with a fiscal year, or do we want to start maybe today or some other date? This is what I was explaining before and kind of stressing. This is a big part of setting up a business and getting the records to make sense and be balanced. This is a big part of that, and have all the information we need. So I'm going to say the beginning of this year, and that means that because we're saying 1/1/2019 and it's 2/10/2019, we would have to actually record all of the transactions that happened